Hello everyone, welcome to my YouTube channel. This Luis here, Cryptolou from all over the network. And today we're gonna do some type of a research. So I'm gonna concentrate on my option strats. How can I say? Plays on more like the ones I believe for earnings, and the ones I believe that it's gonna hit like bigger. So today we're gonna take a look at Palo Alto, which is last earnings hit this big candle over here for a weekly chart right now. You guys take a look. So this one was about 23% down. So the stock came like on a very hot, going up week after week, and like hit the 371. Actually, the high was 376 for the high, and this before the earnings, the week before the earnings, and then the following week. So open at 362, high 369, and then drop to the low 260, and the close was 282. From there, as you can see it looked like it tried to formate some type of cup and handle. So at this point, it looks like we might gonna finish the cup between probably like this week. Gonna be like a very sharp cup, because if you print like a candle like this today, it's gonna go back to 276. 376. So hitting the resistance that was created from the last earnings, which it could be like a double top, could be like, if any corrections in the market, I would say double top. But if you still like we're in a bull market, this could be like some type of cup and handle formation. That's what I draw here, the couple. So I did the whole research on Palo Alto, and the stock actually, so the PCR was the pull call ratio and the open interest. It's a little bit bearish, but on what we're gonna bring to you guys over here. Let me take a pull call ratio. Already got this website. It's like explain the whole put call ratio situation on the company. So the PCR, what I call here PCR, it's if it's 0.7 is the neutral. Okay, so if you go to 1 is bearish, higher than 1 is like going bearish, lower than 1 is going to, and lower than 0.7, because 0.7 is neutral, it's going bullish. Okay, so if let's take a look here. Should have this open. It's OptionChart.io. It's free to sign in. I just sign in, so. But you can pay, premium is $20 a month, and you have 7 days free trial, cancel anytime. This the annually. Monthly is $25. I show the market trend data. I can go into price, team price, like 3+ users, and all that. I see it. There you go. Yeah. So, but you can do like free. You can have just a limit research. So you go to Palo Alto. The only thing that interests to me is this one right now on the put call ratio. We have two put call ratio. We have the volume put call ratio and have open interest put call ratio. So the put call ratio gonna say is PCR. So okay, so we have the PCR for volume. It's a 0.48. That means bullish. I don't know if you guys can see it. And PCR for open interest, it's a 1.02, which means bearish. Okay, So of course it has a lot of more numbers over here down the bottom and everything. So, but at this point, what I'm looking at this situation, we can go back to the, let me do something over here first before. I bring to the screen. But what I'm doing like right now, here you can see like the whole situation. The Greeks, let's take a look. See, no, say the Greeks had to pay. So this whole down here is more like I have to pay. This is the multiple expired charts. You know, it's already expired. So I think it go moving forward. It's a little bit different, but the overview, it's bullish sentiment for the last month. So it's the last 30 days. It's pretty much like bullish on the volume and bearish in the ratio. Okay. So how can we read this? So why bullish? First of all, it might have the formation for the cup. Okay, which is like, am I gonna hit this 376, which is another resistance? Am I hit the resistance? I go back a little bit, might trade in a 349, something like that, and this range over here. Second of all, let's go to the, so let's take this off. Let's go start from the minute. So in a minute, we have this MSBOB, which for me is like it's right on the money. As you can see, like every time the candle hit the block, the bull block, which is the green, like this block bar, you know, whatever you want to call, a hit over here, it just go up. Okay, that's it's in a minute. Another indicator that I have is like the support. Everything like some during the day, the stock is building the support resistance. I have this indicator over here, which call Auto SR by getmoshi.py. So it prints like the resistance, the support, and the resistance on it. So right now it's only support that we have right now, no resistance at this point. So the second one, let's go 3 minutes. As you can see again, a lot of green blocks going from the 315, push the stock going up, close to 318, probably 317, something like that. So, and then you go 5 minutes. So every single indicator from 1 to 5 right now, it's bullish in a Palo Alto. Because as far as I can say, intraday, especially going before earnings or going to earnings, every time we have these blocks, because I think this is probably like go in a bullish way. All right. It's so far so go. It's been like hit it twice. Like this could be like a double bottom for the 5 minutes and kind of build a big support and everything. So, and remember, the stock was trading at 386, at 376. So the 26%, the 25% downside that happens in the last earnings in February, a lot of people get into they think that was manipulated. So they say, if you lose money, go to this lawyer, you know, this and that, blah, blah, blah. So they open like some type of process again, Palo Alto, again, the stock. So I don't know if they're going to bring back the price up to at least 376, which means 60 points. Would it be like 20%? So as you can see, if moving forward in the 15 minutes, we have another bull block, OB. So go 1 hour, build here in the 299. No reddish short position at this point. The 2 hours. 2 hours we had nothing, no bear. Actually, I mean, you have to zoom out to show that was open in 2 hours. Down at the bottom when it hit like the 260. Yeah, it was 260. It was the low for that day. 2 hours. 2 hours we had nothing, no bear. Actually, I mean, you have to zoom out to show that was open in 2 hours. Down at the bottom when it hit like the 260. Yeah, it was 260. It was the low for that day. 2 So moving on. So that's the big candle that for the 4 hours we see it. 260 was the bottom. A lot of buy happening over here. Building a big support. Moving the stock even going higher. So again, we can see it now. The red bearish situation, which is the 2 blocks. The first block, it was on a 376 that was all-time high, and the second block was built in a 341, kind of like still holding the stock on the downside. As you can see, you have this this enormous gap from the closing at 364 to 260. So it's about 100 points. Almost 100 points in this downside. So again, here you can see it even better, because if you draw a line over here and if you go like this, we see the formation for the cup going on right now. Cup in handle is a bullish formation from the stock. Of course, this is Friday. Today's Saturday, May the 18th. So Monday, the only thing you can go and maybe hit it is 340 before closing. Maybe, if you go here at 331, they're gonna push to this block to try to kill this bear position. The 340. So the problem is right now that I'm looking at is this. So okay, so say we push close to 330, 340, the bulls are gonna try to go up and this and that, blah blah. Fed is gonna speak during the week, and we're gonna have a situation that the Fed may say something bad, So if something bad comes up from the Fed meeting this week, whatever he's gonna speak, and then we go bearish in the market, this might gonna take effect, and then the stock's gonna drop it again. So it's very difficult on the, what can I say, in the bullish market to hit on the stock, because what happened in the bullish market is the 2 other things that actually it's horrible. It's first of all, the VIX, it's way down. It's 11, 12 points. So meaning like no volatility in the market. So probably what's going to happen is, not going to predict the future, but the years that I've been trading and see it, that's probably going to happen. The stock's going to go bullish, going to hit the bear position, and then probably going to go down from there. And probably it's going to close. So that's what happened. It's called the IV crush, because the IV might be hotter and both sides, and maybe like 100%, 150%. We're gonna take a look a little bit, and then if you go that, and then the stock only move predictable to move around 10%. If you only move like 5 to 6%, that crush both IVs. And if you do like a straddle or strangle, you're gonna lose all your money, because both legs gonna lose 80%. So meaning like this case, we're gonna show to you guys 2 possible plays just in case that happens. Okay, we're gonna go from straddle, and the second one is gonna be like, I think, inverse or a condo. So with the VIX low at 11 points, this is not good. This is not good for options. It's gonna kill all the IV, all the implied volatility. So the VIX has to be around here on a 220 points. When this happened, we supposed to be at how can I say, the bearish situation, because when the VIX go high, once the stock go down. So the stock market right now, we close all-time high at 40,000 points in the Dow Jones. We have going all-time high and a NASDAQ. And also probably, yeah, it's still all-time high on a SPX, which is SPY, SPY, SP 500. So those three indicators that the market is being bullish at this point. Actually, I was doing this research and I see like the pattern that we have. So we have like 16% and we correction 11%. Right now we had like 26% into the 5% correction. So we're going up again. This lag high. And let's see. I think I took it off. Oh man, took it off. The 200-day moving average, we probably like way up at the 200-day moving average from the SPY, which is like the 500 companies, the index. So, saying the whole thing, like that's what we're seeing right now. So now let's bring what I have. The name of the channel is called OptionsTrade Ideas101. So now we are in the options strat. So if you look right now, Palo Alto, back in that Palo Alto, it's sort of like bearish situation. So they have like $5 million on the red side, 10 bets. Against only 5 for $2 million on the left side and the bull side. So we got the bearish flow and the bullish flow. Right now, it's very bearish situation. Let's bring over here Palo Alto again on my trading view. And let's show you guys one thing. So if we bring this forecast for Palo Alto, so the price target is 335 was only 5%. So the IV on that it's 10 for the week. So right now we only, I didn't think it. We moved something, but I don't record it to go that high. So the max is back to the all-time high, which is 21% at 385. The average is a 5%. That's probably like the most that we're gonna have. The current 317. I don't think it's gonna hit it again. 270 on the bottom because the cup and hand information. As you can see, the rating for the analysis, it's buy with 32 strong buy, 4 buy, and 15 hold and 1 sell. So look like the whole thing is the company beating the top and actually beating in the bottom. I only missed one in the bottom, but beating the top quarter of quarter, big time. It's not even actually from this one to this one, they down 2%, but the 35 at quarter 23, second quarter 23. 17, but yeah, so they're like average, I don't think they are bad in a bad situation. So okay, let's go back in option strat. Option strat, we have this situation. So if you click here and if you look the sell side, we have this bearish. Now, if you go on the bull side and the buy side, it's still bearish. So both sides, buy and sell, it's a bearish situation. So this is the scenario in the option strat that I want to see it to confirm it my bear position, So because sometimes you go you go in a buy and this is like bullish, and then you go sell and sometimes this is bullish, the other side is bearish. But in this case, both sides, the buy side and the sell side, they're both bearish. So that's the really bearish scenario. Even the whole like the whole scenario for the website from TradingView show me the buy and a cup handle and everything. Just because the block and the 340 that I showed to you guys over here, it might be something that kind of like will hold the hold in a 330, you know, which is going to be plus 5%. So what I did in this case, which call this the one that I did like a save options strategies. It's the possible plays, okay? The possible plays I have two scenarios. So if you only move at 5%, we have this open this long call condor, okay, which would be the neutral one, the long call condor. That's what I did. So saying that, it says if you're gonna be inside of 5% trading, especially on the upside. So we open this to, if you hold towards the end, it would be 20 between 2100 to 2700 either way. And the net bet, it's $1,118, $185. The max loss is $300. $3,435. And the profit, it's $1,565. So the chance of profit is a 52%, and the break even has to be between 290 and 350. So we are pretty much good, because we're looking at, we're gonna be right on that for the rest of the week, because this is not gonna move. If we move either way, it's gonna be inside this range, because we have a strong bullish situation even above the 290, and you have some bearish situation right on the top of the 350. So we see if this play on my concept from my reading is going to be the one that actually going to be profitable. The second one that I opened over here was the straddle, which right now the implied volatility is at 93%. So meaning like if we kept in the 5% range, so we're gonna be losing money. So right now the chance of profit in this one is 42%. The net bet is 3,265%. So the max loss is everything at 100%. And so then we have right on the money for this play with the straddle, 317.50. And if the whole week, remember the earnings is Monday, okay, so this don't count because we're not gonna do anything here. So the play would be like this day. So what happened is, say it didn't move 12%, it only moved like the 5% that we predicted. And normally what happened with the IV, it just dropped, let's say 30% in IV. So if that happens, we're losing like $1,000 on this play. So for this to happen, the chance of profit drops to 23%. So to this actually become a profitable, the stock needs to go at least the 23%, so that probably, even if the IV dropped to 62, dropped to 30%, and if the stock go from anywhere, so the break even is 284 to 350, so If you go anywhere from the 355 and the top to like 380, that's profitable. You know, making $3,000. So we double the money. That's 100% profit. Yeah, 100% on the 385. Yeah, 355 we start making money. 348 it's a loss. And the top, and then in the bottom it's 281. It's profitable all the way up to 244, which I don't. As far as I'm concerned, at this point, it's not gonna happen. So on my case, I believe the price is gonna be inside this range over here, which is 100% loss for the 0% to maybe 6.9%, pretty much. That's what I'm looking at this point. This is like, and then we're looking at the IV only drop about 30%, and also even if you hit the 23 and then drop to like 5 and up or down, so boom, 50% on the 30 and 150, yeah, around 50% the whole day. During the next day, Tuesday after the earnings. And now if you have because the Fed is only going to speak on the Wednesday, and because it's Monday, actually, like, I never see this company post earnings on Monday. So if they post on Monday, they come up some good and the market was good and everything, Tuesday open the green side and everything, and they boom, put like a 30%. That's almost 200% gains. It's like $6,000. Normally when they hit this high, the IV stay at the same. So bring in like 200% gain. So we are good in this situation, But the thing it is, the earnings has to move this high. So would it be at least at 376? For the price, there's 80% gain, which would put us in a $2,000 profit. The contract value would be 1140, 59, 376 at 5,900. So you put 3,000 to make in $2,000 profit on that one. Yeah, $2,600. It's pretty good. It's a 100%, 80% gain. So it's wonderful. So I cover Palo Alto. Last week I missed big profits on Baba because I bought the 81 call for the 27, but I sold earlier. So if I hold into Friday, would I make $900 out of $60? Would it be like over 1,000%? I missed my 5:15 call for a Microsoft because I knew it would be the what they call. They have the dividend on the 15. So after that, I would say, well, maybe actually that's what happened. The 16 stock went up for 23. Would it be $800 on that one? Because I think I purchased for $120, and would it be $700 profit? I sold early. I make some profit, but very little. The other one was a day trade that I saw from Walmart being like a surprise on the earnings. So I took a quick look at Costco. 804 for Friday was like $100 when I bought, and went up to like $490. So I didn't make it $390, but I got for $104. I sold for $117. So I made $13 on that one. It's a boomer. So now I'm gonna concentrate more on the earnings and like my reading right now. And of course, right now is not make money with little money, because at this point it's just like everything is so expensive. What I noticed even if VIX lower at 11 points, like I show you guys, the premium, it's ballistic, you know. So the 317 right now, right on the money, is $1,600. This should be like $200 or $300. No more than that. It's a 16. So this is crazy. So saying that, it's like, and to buy out of the money, it's like, let's see, if you buy a call out of the money, like in a 375, it's 215. So for you to make money in this one, so the stock needs to go more like 380 to 390 to be good, because even if you go at 360, we're gonna lose all the money. We're gonna lose the $200. So last time for me, what happened was, what I did, I got like way out of the money. I said buy a put way out of the money, but let's go a call out of the money. So let's go to 380 call for the 31st. This costs right now $247. So what happened is, if we move to 370, this is gonna go crazy, because let's exclude these two. So see what I'm saying? On Tuesday, if the stock move on a 30%, okay, and the IV is still at 72, and we put like a $247 in this play, which is, I'm gonna take a look at something really nice over here. But so on the next day at 9:30 a.m., this contract would have paid me 1,500%, like on the 400, 30%. But say if you hit it like 18%, still a 569%, which is the value of the contract. It go from $200 to $1,600. So it's a profit of $1,400 on that one. It's crazy. So it's included. So this is my play. There's two plays that I have. Palo Alto, which is the long call condor, and also the straddle. The total play here would be like $5,000 play. Let's see if this would have hit like a big number. Saying that, thanks for watching this video, and see you next time.